Welcome to episode 7 of the ICT Mastery Blueprint, a series where I cover all of the smart money concepts and ICT trading concepts taught by the Inner Circle Trader. And I'm basically going to be covering them for you guys. You can implement what you want into your own trading model and or trading or ability to read price and understand the language of the trading algorithm. Today, we're going to talk about premium and discount. This is episode 7, I believe. And let's get started with the PDF. You guys know I don't like to waste any time whatsoever. So what is premium and discount? So most people know what this is, but if you do not know, and I'll move my camera over here, I'll cover it for you guys. Premium and discount, basically in very simple terms, refers to where in price it is expensive or cheap. So premium is expensive and discount is cheap, right? So if you want to be technical, premium and discount refers to the price ranges that are considered premium, expensive, or cheap, discount. Every single range inside the market can be identified within that range, every single range, there can be a discount and premium that can be classified for that range. So every single range has a premium and discount. All right. So for example, if we have this trading range right here, right, everything in the upper portion, so 50% and above of that range, is premium. It's considered expensive, right? And everything below 50% of that range would be considered discount, would be considered cheap. So how do we use this in our trading? 4 main things that you need to understand about premium and discount. So I'm just going to read this off the slide and explain as we go. High probability shorts form in premiums than discount. So it is higher probability to short from premium to discount. Basically, you want to sell something expensive, right? You don't want to sell something cheap. Higher probability longs form in discount than in premium. Basically saying, ideally you want to buy something cheap and therefore sell it expensive, etc., and vice versa. So that's the 2 main components of premium and discount. There's another component that we're going to talk about in this video. When the algorithm enters a buy program, meaning the algorithm is going to deliver price higher, it will seek premium. The algorithm enters a buy program so it can seek premium, so it can seek expensive pricing, right? It wants to go from discount to premium. That's what a buy program will do. A sell program will do the opposite. So a sell program will seek discount, basically moving from expensive to cheap or from premium to discount. Note, your task is to identify which range to refer to when looking for discount and premium, because there are multiple ranges and then there's ranges inside ranges throughout the trading day, and you need to figure out which discount and premium are you looking for. Okay, so let's talk about the classifications and types of ranges that we can look at. So first we have a dealing range. A dealing range refers to the range formed where there was the most recent take of buy side and sell side liquidity. So we just took out buy side and the most recent sell side. That is your current range that you're working with, and it's your dealing range, okay? You also have a daily range, which is just the highest high and lowest low of that current day. You have the previous day range, which is the highest high and lowest low of yesterday's trading day. You have the trading range, which is just the most recent high and low. So it doesn't matter if we take out buy side and sell side on both sides of the range. This refers to just the most recent range. And then you have your opening range, which is your range from 9:30 to 10 a.m. Eastern time. So we'll talk about this and I'll go examples over this and how you can use every single one in the charts. The last thing I want to mention before we get to the charts is, if you remember our internal and external range video, which by the way, hopefully you guys are watching these in some kind of order. Ideally, you want to watch those previous videos first as the concepts go more and more in depth and advanced. We want to talk about this, just referring back to what we talked about in this video last time. If you are bearish, you want to see price respect premium of the range, and then you expect to expand lower. If you are bullish, you want to see price respect discount of the range, you expect to expand higher. So basically, if you're expecting a range to expand higher, so you have a range and you're expecting it to expand higher, you want to see us respect discount. That's this example. In this example, if you want to see a range expand lower, you want to see us respect premium. This concept can be implemented on any price range, as the concept of premium and discount is fractal. Let's cover all of what we just talked about on the charts, and we'll talk about how you can take trades with this, read price, and identify different ranges so you can implement this to your own trading. Okay, so the first thing we're going to cover is this last idea we talked about in the PDF, which is if you are bearish, you want to see price respect premium of the range that you expect to expand lower. And if you are bullish, you want to see price respect discount of the range you expect to expand higher. So over here, we have the daily range. So at this point in time, we have, and let's say at this point we have the swing point. This is the 15-minute time frame. This is Monday, March 31st. This is your daily range, right? So if you were coming into this day bullish, it means you want to see price respect discount of the range. In this case, we're referring to the daily range, so highest high and lowest low of the current trading day. And if you want to see the range expand higher, then we should respect discount of the range. So right now, this is the current range. This range can expand. If we're to respect discount and you're bullish, you want to see the range expand higher. You can see here, we come back into discount and we expand higher. Very simple kind of explanation of how this move can be visualized or characterized by premium and discount. All right, let's do some more examples. All right, so here is another example where we talked about if you are bullish, you want to see price respect discount on the range, you expect to expand higher. So right here, we have a dealing range. If you remember what a dealing range is, it is your most recent sweep of sell side and buy side liquidity. So over here, this is your most recent take of sell side, right? Your most recent low that was taken, that's the lowest low. There's no other low that was taken here, right? We have lows, but they didn't take out any other low. And then your most recent take of buy side, that would be right here, right? So this would be your dealing range on the 1 minute time frame. This is also NASDAQ on March 31st, Monday. So if we want to see this range expand higher, you want to see price respect discount of the range. And you can see here, price pulls back into discount, and then we expand in the range. Now, obviously this move is sloppy, but I want you just to visualize how this characteristic is true for whenever you expect a range to expand. This also overlaps with the internal and external range liquidity concepts. I'll give you guys a bearish example, and then we'll move into some other examples that you can use premium and discount for. Okay, so in this example, we're on the daily chart, and we have a dealing range that is defined because we took out this low. So this is your most recent low. We also took out this low. So this is your most recent take of sell side. This is your most recent high that took out buy side. This is our dealing range on the daily chart. You can see we marked up premium and discount from the highest high to lowest low in the dealing range. And if we want to see this range expand lower, then we want to see premium be respected. What ends up happening? We move into a premium city, and you can see right there, the range has expanded. So now this is your dealing range, right? So this is again, your most recent take of buy side, and this is your most recent low. So that range has now expanded. You can see we have another premium array, which is right here. You can see price trades into premium, and then the range expands yet again because we came back into premium. Now it's not always going to go into premium, but this is where you can find your best trade ideas. Because if you remember early in the PDF, we said the best highest probability shorts will be from premium, and then the same thing for opposite for discount. So this is your most recent dealing range again. If we mark it out, the range has expanded lower. If again, if we're expecting the range to expand lower, then you would look for the same thing. However, now you can see we took out this most recent high. So now the dealing range has changed. This is your current dealing range. This is your most recent low and most recent high taken. And then we can see what happens here. We end up going into consolidation. And if you were to look a little bit closer, right? So in this specific instance, now this is a tough market, but we'll keep with the example because it's not always going to be an easy market. If you're expecting the range to expand higher, then you'd want to see discount respected. In this case, you have a bullish fair value gap right here. It is small, but it is mighty. And you also have a bearish fair value gap that got invalidated here. Now, obviously, it took some time, but nonetheless, the range expanded higher and we respected discount. You could repeat this process again and again and again. So where's your most recent dealing range, right? Your most recent dealing range, so this is your highest high that took out buy side. There's your swing high. And then your most recent low that took out sell side would be right here. This is your current dealing range on the daily chart. And you could repeat this process to see how price can move. So for example, we respected this new week opening gap, or new week opening gap, which is a premium array of the dealing range. And because we respected that, and we expect the move to expand lower, we have an inversion here, refer back to that, the range expands lower, etc., etc. So you can kind of repeat this process. Now, obviously, you need to know which range you're trading in. It's not like a foolproof method to automatically take good trades every single time, but hopefully you can start to see how you can, when you expect a certain range to expand in one direction, you can frame the premium and discount and look for trade setups that form at a higher probability, right? This is all about probabilities and where you find your best trade. So now that we talked about that expansion criteria for higher and lower, let's look at some more specific examples of how you can use premium and discount in your trading, let's say tomorrow, right? So this is from today's price action. And you can see today we had very, very bullish order flow, right? So if you wanted to potentially scan for a continuation that is higher probability, right? You need to understand which range that we could potentially work in. So let's say, for example, at this point, would you look at this entire range, which is your current daily range? So pretend this data is not here. At this point, if you wanted to look for a long, you're not going to refer back to this low. Now, yes, we talked about a situation where you can use the daily range, but in this instance, it wouldn't make sense because we're actually bullish. So we don't even ever expect this low to be traded to. In fact, we could probably expect that this low wouldn't be traded to. So what can we do in a situation like this, right? Well, we can use trading ranges. So, or your most recent dealing range, right? So this, if we refer back to the dealing range, would be right here. So why this low? Because this low was the most recent take of sell side liquidity. So we took out a low and then moved higher. Now we have a clear defined dealing range, basically annotating that if we're going to continue higher, we're probably not going to take out this low. If we do take out this low, then we understand we were looking at the incorrect range and we have to zoom out, potentially to the 15-minute time frame or something else along that sort. But in this specific example, we have equal highs right here, right? Which is always a good objective. The market accumulates, expands lower into discount. And remember what we said. If we expect the market to expand its range higher, then we want to see discount respected. Over here, what happens? We expand into discount. We get a bullish order block and a change in the state of delivery right here, and we see that run towards the buy side. So this is a very simple way that you can just outline a premium and discount continuation idea where you can use that as a higher probability. Now, the most important case of this is, and how I use this in my trading, which we'll get into, is when I'm looking for a continuation trade. That's really the primary use, right? Your best continuation trades will form in discount. That's just a simple truth every single time. You can notice the market didn't show any signs of going higher until it reached discount. So this kind of pairs with order flow concepts, and also you compare this with really anything, for example, time, right? So right here, we entered a lunch macro, 11:50 to 12:10. You can see we pretty much delivered take profit perfectly at that time. So notice how things are starting to align. Hopefully you guys can start to see how you can use premium and discount. Let's do one more example, and then that'll be it for the video. Okay, so the last example I want to cover is we have this daily dealing range defined on the fact that we took out this high and we took out this low. So this is our daily dealing range. So yes, we can expect bearish delivery on the daily chart. So in which case, if this daily range is going to expand lower, we'd want to see respect premium, right? But if we zoom in, let's say to the 4-hour, right, we can frame a trade idea where we're looking for longs on the lower time frame to premium, and then from that premium of the daily range, frame an idea where we can look to expand that daily range. So for example, if you were trading today, we talked about that long setup where we're looking at this premium, right, and discount of the dealing range where we would trade back into discount and continue higher. Now that move higher is framed on the daily dealing range where we're seeking a premium and prices entering a buy program, moving from discount to premium, right? So this is how you could frame an idea on both sides, where we see a move from discount to premium on the daily, and then if we are to respect premium, right? So you would be looking at, for example, this bearish fair value gap, or perhaps this bearish fair value gap, or we also have a small one right there. You could expect a move from premium from there. Now that's if we respect premium. So we're not talking about bias, but hopefully that makes sense in terms of how this move discount is sponsored towards the premium of the daily dealing range. And we could potentially expect, now that we are inside that premium, a potential move lower if you are bearish and obviously expecting that move lower. So using the daily dealing range there, I hope you guys were able to learn something about premium and discount and hopefully implement into your trading. That being said, that's pretty much everything I want to cover in this video about premium and discount and trading ranges. If you have any questions, feel free to leave them in the comments. Feel free to join the free Discord and ask me anything in there. I will see you guys next time for episode 7, or I think it's episode 8. Take care. Peace.